Hi everyone, it's the Catholic CEO Henry Kutarna. Today I'd like to speak to you about the sole proprietorship model of doing business, or as it is sometimes called fashionably these days, the solopreneur. The idea of a sole proprietorship or a solopreneur is that it's really one person who is doing the business. It could be a side gig at home. It could be you making your special sauce, roasting coffee part time, doing some woodworking, metal work, and selling a product. Or it could be something slightly bigger than that. But generally speaking, we're talking about one person who is running the business and making all the decisions, taking all the risk, spending the time, selling the product, making it, financing it, all that components, you could say, of a business. So the sole proprietorship, solopreneur, it's a good model. It's a worthy model. It's often the way we start out. Even the largest businesses that you could think of, maybe in your neighborhood or in your city, has started out as a one-person business. Sole proprietorship, solopreneur, somebody doing it part-time, somebody transitioning out of a corporate or business job into their own business. So one way to look at this solopreneur thing is to break it down into two types of organizations. One is what we call the LLC, the Limited Liability Corporation, or the corporation, the company, which is a legal entity that's set up and incorporated under the law of your state or your province or your region. The other category is what I would call the non-limited liability corporation, where you're not incorporated officially in your state or province and you just do the business at hand. And I'm going to spend a little bit of time discussing the difference. So first of all, let's summarize. The solopreneur or the sole proprietorship can be divided into the incorporated business or the unincorporated business. Generally speaking, one person doing the work, making all the decisions, one shareholder, in the case of an incorporated business, one director, really one boss. Let's dig into the LLC, the incorporated business. To do this, you would either contact your attorney or your lawyer, or you might do one of these self-incorporation kits that you buy. You can get them online, of course, and there are a million of them. And you can incorporate your business. So it becomes a legal entity under the law of your state or province. It allows you to do business in a certain way, and it confers certain rights upon you. One of the most important things to remember is that in an incorporated business, it creates a firewall between you and your business. So for legal purposes, if you're making a contract or if you're entering into a dialogue with somebody, a company, you're buying products or services, you're hiring employees, contractors, and so on, there's a firewall. It's the company itself that's doing that, and it's not you as an individual. You as an individual, yes, work in the company, but you're not officially, legally doing that. The company is. So one way to look at it is to think of a company as being a person under the law, independent of you as an individual. So this firewall concept is important. As you can see from the term limited liability corporation, the liability, that is the risk you take from being sued or acting illegally in some way, is limited. The company takes on the liability. Your personal liability could be limited. Usually it is. There might be some exceptions for criminal acts. But the company itself, because it's a person under the law, takes on its own liability. So the company is a person under the law. You're not exactly. But if you direct your company to do something illegal, you might be implicated. In an incorporated business, you will do an annual filing. There will be an annual rule, a legal requirement that you file a set of documents that shows various resolutions appointing you as a shareholder, you as a director, resolutions that maybe require you to have an accountant or an auditor or a financial statement, and otherwise proving to the state or the province that you intend to continue in business. So there are continuance processes that follow. And these are usually done through your lawyer or your attorney. And they can be done on your own, but it requires a lot of work, and you have to know where to go to file, and it's a complicated process. And I don't recommend that you take it on yourself. In a limited liability corporation, you will do annual tax return filing. You will issue financial statements. You will file any other regulatory requirements that you're asked to file by your governing authorities, your provincial, state, and federal, national governments. You will have a separate bank account, usually, separate credit card. Your liability for loans and debts and lines of credit and things like that will be separate and apart from you personally, even though you might have to sign a personal guarantee for your company. In general, then, a limited liability corporation, because it's a separate person, does all these things separately, but there are some regular requirements. You need to file, you need to pay attention to these things, and you can't be late on them, or you'll pay penalties, or you may be struck from the company register, so to speak. I'm going to discuss now the difference between the limited liability corporation and the sole proprietorship. In the sole proprietorship, as you've by now figured out, you're not incorporated as a legal entity. Therefore, there is no firewall. The actions you take as a business owner, and you can still have a brand and an identity in one of those DBA, doing business as categories, but there's no firewall. You make the decisions in your company, in your business, and you're going to pay the price, so to speak. You're going to take responsibility. So there's no firewall. If somebody sues your business because your special sauce is poisonous, let's say, or you've got some sort of a serious problem, you yourself are personally liable for that. So in a sense, it's unlimited liability, not limited liability like in an LLC. It's unlimited liability, and there's no difference. There's no distinction between you and your business. And so if you get sued, or if you enter into a problem, or you do something illegal or outside of the regulatory framework, you yourself will be liable, and all your assets will be, brought into the picture as well. The business, in other words, is the same as you. Under the law, there's only one person. It's you. And yes, you can have a business, and you can sell products, make profit, do all sorts of things like that, even enter into contracts, of course, hire people. But you're no different than your business. There are no two separate entities under the law. This is an easier method. You don't even need to do financial statements. There's nobody that tells you have to do it. So you could run your business in an obviously sloppy fashion that I wouldn't recommend, but you don't have to do financial statements. Your income tax is filed on your personal tax return. So there's always a category, both in Canada and the US, that you would file your sole proprietorship tax return in common with your personal income tax return. You might have a separate bank account and a separate credit card and a separate loan set up, maybe a line of credit for your business, but there's no company. It's you. And so it will differ from you and your personal bank account, your personal credit card, and your personal debts only slightly in name, but in terms of actual liability, the bank and the law will look at you as a single entity. So that's a brief summary of the difference between a sole proprietorship and an incorporated business. I'm going to point out briefly today a few challenges that each of these presents. If you are a sole proprietorship or a limited liability corporation with one person, solo, you yourself, you're going to have some challenges no matter which of the two methods you choose. You're going to have, the first challenge I would say is, where do you get your advice? If you don't have a team, a group of people, colleagues, fellow owners, shareholders, partners, that sort of thing, where are you getting your advice? There's a high risk to running a business as a sole proprietorship or a solopreneur without having some sort of a backup system or somebody to watch your back or somebody to give you reaction to your ideas and your strategies. And so, obviously you'd want to have a PAB, a personal advisory board, or some other entity that looks at your situation that you would be, willing to share with them and they would give you some advice and watch your back. So that's one challenge. The second challenge is similar to the watch your back. It's the, you might make moves and you might have to backtrack or correct. And so it's better to have pre-action input on your decisions rather than afterwards. And same with the course corrections. So the second idea is a little bit different than watch your back. Course corrections, if you have somebody to review things with, or if you have your own set of dashboard indicators, you'll be able to make a course correction sooner, and therefore 2-degree course correction is a lot easier to do if the ship is off course, than if it's a 25 or 30 or 40-degree course correction. You can understand that model. The third challenge that I would propose in the sole proprietorship model, the one-person model, is you don't have a team to divide the labor. So you're doing everything. You're buying the supplies, you're packaging, you're selling, you're doing your website, your social media, you're delivering, you're packaging your product, you're storing inventory, all those tasks are your own personally. And that can be a tremendous strain and a pressure on you. It can be very exciting if it's a small hobby-like business or a side gig or something like that, sure. But at some point, as you grow, you're going to realize that it's important to have a team. So while I respect greatly the sole proprietorship or the solopreneur, I really think that it's better to move on from that model at some logical point in your process, because you're going to need a team to divide the labor, and when you have a division of labor, then you can have specialization, which means that if somebody's better at marketing and sales than you are, or if somebody's better than financing your business and figuring all that out than you are, it might be better to have a fractional person on your team. Now, you don't have to hire that person necessarily. They could be on your advisory board, as we mentioned a few minutes ago. But the idea is that as soon as you can, I think you need to fragment the workload and divide it among other people. A fourth challenge is the difficulty of growth. How do you grow a business? How do you scale it if you're a one-person show? Again, you may not want to do that. You may have what we call a lifestyle business, where you just, create a business entity and you do it and you enjoy it and you carry out the work on a sort of a more basis. And I don't say that negatively, casual, a little bit less time pressure. And so if you make a specialty product, for example, I know a fellow who restores pipes, smoking pipes, That's a leisure type business. It takes a long time to restore one of these things, and he's a busy guy. He has a family, and he doesn't just hop to it every night after the kids are in bed to restore a pipe. It's something that is a labor of love, and it's kind of a hobby, but there's a commercial aspect to it. He can sell these things, and so how do you scale and grow that thing? If you want to make $100,000 a year doing that, well, you're going to need a team, and so you will have to move beyond the sole proprietorship model. Another challenge is the balance between your business and your family. Obviously, we want to lead a balanced life. As Catholics, we want to live an ordered life full of virtue, and so when we live an ordered life, we mean that not only faith, hope, and charity, but prudence, justice, temperance, and fortitude. We're going to govern our lives by that, and so you will want, in a sole proprietorship or a solopreneur, whether it's a limited liability corporation or non-LLC, you're going to take the risk then of putting on your shoulders everything. That's a lot of pressure. That can be a challenge. The great advantage, as I'm sure you can see from a sole proprietorship, is that you can turn on a dime. You can be nimble. You can pivot. You can do all those things quickly. You can make decisions quickly. You don't need to consult widely. You can do your homework. You can make decisions. You don't have to appease or satisfy a group of people. You still have to pay attention to your customers and satisfy them, of course. But internally, for the decision-making process, the great advantage of a sole proprietorship is that it's up to you, and no one else can really criticize your moves. So there you have it. There's a great reward to doing business this way. It can be positive. You can organize it in a couple of different ways, and you can now understand, I think, a little bit of the advantages and disadvantages and the differences and the distinctions between these models within the sole proprietorship model. So God bless you in your business enterprise. I hope you can enjoy your solopreneurship role, and I hope that you can prosper and do well. And I'll see you next time. This is the Catholic CEO, Henry Kutarna.